Hey, and welcome to a new video here. Today I want to talk about one of my favorite topics, and it's the RSI indicator and how you can use it to find momentum, and also how to use it to find trend reversals. So first of all, the RSI is a momentum indicator, which means that the RSI shows you when price is having a very strong trend, or it also shows you when price is just ranging. So the first look, we can already see that here, for example, we had a very nice rally here, very strong. And at the same time, the RSI also was moving very strongly into the highs here and confirming the upward trend. Whereas we can see here, price was in a sideways range with only some swings, but no directional information and no directional momentum. And here we can see that the RSI never really made any runs in the highs or in the lows, but it just fluctuated around the center. So the first thing you have to know about the RSI is that you can only use it during strong trending markets, and you cannot use it during ranging markets. Second, I use the RSI not to find momentum, but to identify fading momentum. So I use the RSI to search for clues that, in case in the example of this rally, that buyers are leaving and that the uptrend is likely to reverse. And the RSI is a very great tool, and especially if we combine it with the conventional technical analysis. The way I use the RSI is a very universal concept. You can use it across all time frames and markets. It's a timeless approach, and you will see that we just analyze price movements and we don't rely just on the indicator itself, but we combine it all to come up with very specific and educated trading ideas. So let's stick to the rally here. For example, we can see price was moving higher, and during trends you can almost always see those trend waves. And a good rule of thumb that I use is that I don't use the RSI to find reversals during trends where you only have one or two of those pushes, but I only use the RSI and I only enter reversals after I have at least 3 of those pushes, or trend wave as you will call it in other trading methodologies. And this will already keep you out of a lot of unprofitable trading situations, because the trend is much more likely to reverse if you have those 3 pushes. We can already see when we just use the arrows that something is changing here in this market. So the first bullish rally was very strong and very large. Then the second one was much shorter, and the third and final one was even shorter again. And then, that's a very important clue, after the third wave, we never made another high, but we just slowly started to moving lower, and then before we just broke down. And at the same time, our indicator and our RSI confirm that. So first, you can see we have been moving higher, but then what happened here during the second push, the RSI barely made a new high, barely made it above the 70. It just scratched the area here, and then the final one again, you can see price, although price made it above the 70, there was a major divergence, and this is a very important criteria, and you will see this on all good reversal trades with a multiple trend wave, that you always have a divergence at the end of such a trend wave before a reversal. The first 2 clues, if we can sum it up, is first, you just look for trends with multiple trend waves, at least 3. Then second, you look for the divergence at and after those 3 trend wave. And this is when we go, doesn't matter if you go forward or backward, you can always see this behavior. It's not something that happens rarely, but very frequently, not only during trends, but also during consolidations and ranges. So here on the way down we had this massive first swing. There were multiple little swings in between, but we just focus on the big one because there was not a strong retracement in between. And then we are now seeing what is very often happening around market tops at market bottoms, that now we are just seeing last pushes, very desperate tries to move lower, which is always, and the rejections are coming earlier and earlier. So price is not able to make new lows. And at the same time, again, our divergence is very massive here. And this is highlighting a potential reversal then to the upside as well. And even if we go back in time, we can see this behavior everywhere. Here was a nice trend. And you can even see that here, for example, we had a few multiple trend waves, but this really never led to a reversal. And you can also see that the indicator would have kept us out of this trade because the indicator was moving higher, as was price. So this is not a divergence but a convergence, and we would never have entered a reversal here based on our price analysis and our indicator. Whereas when we move further along and look at the end of this trend, we are seeing here new trend waves. 1, 2, here are a few trend waves in between, and this is very similar to what we saw previously on the downside, but the swings here are not very large. But it shows that this is a very common behavior around market tops, that you are just having those desperate tries to move price higher, which is getting rejected. And even here, this is a very nice example, because this is a pin bar, a very important price candle at market tops. And if you see a pin bar right at such a top here, where price try to break previous high but then fails, this already tells you a lot about potential reversal coming up. And at the same time, this time our indicator is showing a divergence. You can see that the RSI was moving lower, whereas price was moving higher. And this also confirmed that something is changing in the markets. So we can use this information. We can see during this trend wave, everything looked still alright on the RSI. Price and RSI made the same. But then as we moved into the real market top, then the reversal, the swings got shorter. Then we even had this pin bar here and also the RSI divergence. And what happened? We then sold off a little bit, not that strong, but it would have kept us out of any further long positions, and so we could have avoided this as well. And if we want to have a final example, we can look at this bearish wave. So we said here was a sideways range without any importance. The RSI also never really moved anywhere, always stayed below 35, and the highs were at 63. So this is something where the indicator confirmed that we were in a range, but then suddenly price showed the trend waves again, the first one, the second one, and the third one. And you can see this is what we always see around potential reversal areas, those 3 pushes. And then at the same time we had this divergence again, where the RSI made higher highs but price made lower lows. And even here, even better. So as we saw here that we had this pin bar, a price confirmation, and now this time we don't have a price bar confirmation but a chart pattern. And it's always great when you have another confirmation in form of a price signal. So this time it was a head and shoulders, where this is a low, then a lower low, and then price failed to make a lower low and made a higher low, which is an important clue in trend analysis. And it shows that we didn't have enough selling pressure anymore to get price below the lows. And together with our other things like the divergence here on the RSI, the 3 trend waves that got smaller, then we could have anticipated this reversal here to the upside. And that's how you combine conventional trend wave analysis, the RSI momentum divergence, and also chart patterns and price bars to identify likely reversal areas on your charts. If you have questions, just leave a comment below, and I will also put 2 links in the description to more detailed articles about how to find market tops and how to trade divergences. Until next time, and happy trading.